Top three things in my notebook. Number one, oil. Number two, volatility. And number three, I'll go with the Russell 2000 relative to volatility. So first on oil, obviously you have some massive deflation. The Federal Reserve is going to have a tough time explaining this because, of course, they called oil's decline transitory. The only thing that was transitory was the bump up higher in oil prices in February. We are at the lows. Again, oil obviously crashed last year. You know that. What many people did not prepare for was oil crashing for the year to date. So for the year to date, now you have not only Greek stocks in crash mode since February the 24th, down 21%, but you have oil down 21%. So if you're long either of those two things, you're not a fan of Hedgeye risk management. Now, point number two, volatility. This remains in what we call a bullish phase transition. Phase transition, not really big words for those of you who are involved in thermodynamics science or anything that is non-political in that nature. And you would look at that and say, wow, look at volatility across asset classes. Federal Reserve, back to the BOJ and central planners in Europe and back again, are perpetuating market volatility. So this is a point that's important to make. Yesterday on the bounce, really at the highs for the Russell 2000, volatility didn't break down. So again, when you look at a market, don't just get caught looking at the price. Look at the volume and the volatility. And again, volatility is in what we call a bullish phase transition. So in other words, as central planners confuse people on how 0 minus 0 is something greater than 0, you will get more and more market volatility. And again, the market's not just the U.S. stock market, it's every other market that is interconnected with that. Now, finally, just to give you a risk management point from that perspective, whether you're looking at the Russell 2000 or biotech stocks, both of these things, again, hitting all-time highs. At least from where I was born and raised, that would not be a good reference point as your new cost basis as an investor. The all-time high means you're late. So please don't be that guy or gal who's buying the all-time high. If indeed you think the Federal Reserve is going to confuse people, which I rightly think they have and will, then you should sell some of that at the immediate term trade over bought signal. So we got that for the Russell. We actually got that for biotech too. I think it was the first time in 2015 that I've sent out a sell signal on biotech. And again, that was just purely a hedge against the Federal Reserve doing what is most likely, which again is to confuse people. So again, confusion breeds contempt. You want to be long volatility when confusion reigns supreme. You also want to be shorting things at the right time and price. And again, Russell, I didn't say short the Russell. We did say biotech. We'll see if that setup works. But again, that's my way to play confusion on the immediate term overbought levels. Russell 2000 has no support to 1222. It obviously closed 20 points higher than that. So again, it's just a very short-term call, which of course you should have to make. So those are your top three things.